Okay, so this is the last class for financial information. So we'll just be waiting for a few minutes for some of the students to join. We'll wait for 2 to 3 minutes. Thank you. Hey, good evening again. This will be our last class, open class for financial accounting, financial information. So for this week, I'm gonna answer the case study that was given to you by in the past weeks. Okay, so let us try to check. Okay, your answers so that this will be the integration of the concept about financial information. So you remember, we really wanted to use the financial information, specifically the accounting information, to help in the assessment of the decisions that is related to business. So let me share screen. Uh, case study number one. Okay, case study number one. Okay, so let me just pull the screen here. Okay, case study number one. Okay, so here in case study number one, so we have here Mr. John, okay, was enticed to invest his money on ABCD Company, a business entity that was just established a year ago. So they've generated and shown Mr. John their financial statements, and he was amazed of the financial performance of the company, being worried that the financial information might not be fairly presented and that the information might have been modified for the company to look good on paper. The prospect investor requested for an audited financial statements of the company. So you recall, this involves, okay, ethics. No? So the question here is why ethics in accounting is so important to the users of financial statement. So we said that sometimes there are different interests of users of financial statements. Of course, if you are the company, you want to lure investor to invest in the company. So in order to do that, some may opt to give a rosy picture of the company. When I say rosy, this does not necessarily reflect the true performance of the company. So that's why there's an audited financial statement. If you recall, the independent auditors will examine whether the representations of management in the financial statements, income statement, balance sheet, cash flow statement, statement of changes in equity, are fairly presented in accordance with generally accepted accounting principles. So, with that imprimatur by the independent accountant, then the prospective investor can now rely on the financial statement without necessarily asking about the character of the management of company. Okay, because this is done by independent party. Okay, so here uh, there's another problem here. Colin Fernandez, president of Reno Enterprises, applied for a 175 loan from First Federal Bank. The bank requested financial information from Rhino Enterprises as a basis for granting the loan. Okay, so again, the creditor, okay, in this case, the bank, First Federal Bank, will be using the financial statements to evaluate whether to approve or disapprove the 175,000 loan. Okay, Colinas told their accountant to provide the bank with a balance sheet. Colinas decided to omit the other financial statement because there was a net loss during the past year. So instead of showing the complete sets of financial statements, the income statement was omitted. Let's see the questions here. Is Colin behaving in a professional manner by omitting some of the financial statements? Of course, the answer is no. Okay, so it is not professional because the income statement is one of the tools that will be used by the bank to assess whether the company will be able to generate profits in order to service the loan. So that is a very important part of the financial reports that should be submitted to the banks. What type of information about their business would owners be willing to provide bankers? Okay. Of course, normally these are the general purpose financial statements. So you have the balance sheet, income statement, statement of changes in equity, as well as the cash flow statement. Of course, if the bank will request, then the company will have to produce projected financial statements. Meaning, you recall the financial statements that we prepare are historical, meaning they are already completed. Okay, but the bank might want to have some information about the future. That's why they might want to request for projected financial statement. In that case, then it is perfectly okay for the business or the owners to provide the bankers this information. What types of information would owners not be willing to provide? So normally those information that are confidential in nature or those contracts of the company. So because these are uh, in the type of confidential information, meaning if this information goes out, then it would be to the detriment of the company. That's why confidential information would not normally be provided to banks. What type of information about the business would banker want before extending a loan? So as I mentioned, they may want to have information on the projection of the company. And other than that, what is the basis for those projected financial statements? So bankers would want to check that. Of course, the bankers would want also to do a inspection of the business, whether the operations are actually uh, correct as being purported by the owners. So normally, bankers would request for ocular inspection of the facilities. If it's a manufacturing company, they would be inspecting the production facility. They might be also visiting the offices, the corporate offices of the company. What common interests are shared by bankers and business owners? Of course, for the bankers, they may want to have sufficient cash flow. Okay, that's also the same with business owner. They they want also sufficient cash flow so that the owners will be able to service the operation, meaning they can pay for their uh, current maturing liabilities, okay, salaries of the uh, salaries of the employees, okay, as well as other operating expenses. Okay, so thank you for joining, Ms. Sugilon. So I'm now discussing the um, different cases. Okay, so you might want to open your case number one, and then your case number two, three, four, and then the last case. Okay, so I've just finished uh, answering the case study number one. So essentially, this case study focuses on the importance of having financial statements that are trustworthy so that the users of the financial statements, whether they are internal or external users, can depend on the financial statement. So this is essentially the case for week one. No? Okay. So let me let me now answer uh, the second part of the case. Okay. So let me again share screen. So this is case study number two. Okay. So here, if you are able to get your case Miss Joy. Okay, so you can follow the computations here, because in case study assessment number 2, we're gonna prepare, okay, financial statements. Okay, so initially we will be preparing the balance sheet as well as the income statement of the company. Okay, so let's this is one of the submission that was submitted by your classmates. So we're just checking this. Okay, so assessment number 2. If let me know, Miss Joy, if you need more time to get okay to get the copy of your assessment number 2. Okay, okay. So Mr. John was enticed to invest his money on ABC company, ABCD company, a business entity that was just established a year ago. Mr. John requested for their audited financial statements, excuse me, and it was provided thereafter. He immediately looked into the income statement of the company, okay? Then the balance sheet. The financial information from these financial statements can help Mr. John in deciding whether to invest or not in the company. So here's the question. What is the goal of the income statement and the balance sheet? Okay, so as we discussed, the income statement shows the financial performance. Okay, so when you say financial performance, it reports the revenues of the company. It also shows the expenses, the cost and expenses of the company. And when the revenues is greater than the expenses, then you have your net income. But if it's the other way around, revenue is less than the cost and expenses, then you have a loss. So by looking at this, you can see the performance, no? Whether there was a profit that was generated by the company. So that's the balance sheet. On the other hand, shows the assets, the liabilities, and the equity of the company. Okay, so you will be able to find how much is the total contribution of the owners, no? In the form of equity. Okay, so let's see here. Okay, so in case study question number 2, okay, we have here the items, okay, about the assets and liabilities of ABCD company as of December 31, 2020. Okay, so this is the end period already. Okay, but also uh, there's a statement here about the revenue and expenses. Okay, so here are the revenues and expenses, as well as the capital of John De La Cruz owner, which was at the beginning was 180,000 on January 1st, 2020. But there is a withdrawal of 40,000. Miss Joy, if it's possible, I will be asking for your assistance, okay, in computing for the income statement and the balance sheet of the ABCD company. Were you able to get a copy of this uh, case, Miss Joy? You can either unmute yourself or uh, you can write in the chat box. So if you don't have a copy, here's the copy. Okay. So let me know, Miss Joy, if you need some more time to open your copy of the case number 2. Okay. Case study assessment number 2. Okay. Or if I can proceed with the discussion. Okay. So here, what we want to initially do is to find out first which are the income statement account. So when you say income statement account, what can we find in the income statement? We can find the assets as the revenues and the expenses. So here, we're going to isolate which one are the income or the revenues and the expenses of the company. So let's take this one by one. Okay. So accounts payable, that's a liability. That's not part of the income statement. Accounts receivable, that's an asset. Okay, it will not also be part of the income statement, as well as cash. Okay, cash is part of the assets. Okay, which is part of the balance sheet. Okay, so we have here fees earned. Okay, fees earned. So this is, what is this? This is an income. Okay, income of the company. So this will form part of the income statement. Okay, so fees earned. Now, miscellaneous expense. Okay, so what did we say? All expenses, okay, of the company will be recorded in the income statement. Okay, so miscellaneous expense 15,000. Okay, okay, so there's a chat here. Okay, my net is unstable. I didn't catch the discussion earlier. Anyway, if you didn't catch the discussion, Miss Joy, there's a recording of this discussion. Okay, so you can download that later after we finish this class. So we're now discussing the case study number two. Okay, case study number two. Okay, so let's proceed. Okay, so fees earned is 875,000. That's income statement. Okay, miscellaneous expenses, that's a deduction to the fees. No? So this is a negative 15,000. Okay, rent expense 75,000. That is also a deduction. Okay, to the expense, to the revenues. Okay, supplies. Okay, so watch out. Okay, these supplies is not the expense portion. Okay, okay, so this is the asset of the company. So this is not part of the income statement. Supplies expense, yes, that's part of the expenses of the company. So 12,000 expenses. Taxes expense, yes, that is also part of the expenses of the company. That's 10,000. Utilities expense, okay, amounting to 38,000. That is also part of the expenses. And then you have wages expense, 525,000. So normally, what you do is you total all of the expenses. We normally show the highest or the biggest expenses first, okay? And then the other expenses. So if you total this, you have miscellaneous expenses of 15,000 plus rent expense of 75,000 plus supplies expense of 12,000 plus taxes expense of 10,000 plus utilities expense of 38,000 plus wages expenses of 525,000. So you have a total expense of how much? Can you please help me, Miss Joy? Okay, uh, please add all of the expense that I enumerated. 15,000 for miscellaneous, rent expense 75,000, you have supplies expense for 12,000, taxes expenses for 10,000, utilities expense for 38,000, and wages expenses for 525,000. So I'll give you some time to do the addition for that. So if you have the answer, just you can either say it or put it, just type it in the chat box.
That's 675,000.
Yes, that's correct. Okay.
Mhm.
So then you deduct that from the fees earned, right? Okay, so 875,000 fees earned less the total of the expenses, okay, of 675,000. Then you have a net income of how much?
That's 200,000.
That's right. Okay,
Okay.
so you have net income for ABCD company of 200,000. Okay, so if you recall, the net income goes to the owner. So in this case, John De La Cruz. Okay, so let's first so since we've already prepared the income statement, we can now prepare the balance sheet. Okay, so as a review, what are the items that can be found in the balance sheet? You remember the accounting equation? Okay. So we said we have the assets equals the liabilities plus the owner's equity. So let's see again. Okay. Let's find in this listing how much is the asset of the company. So you remember the total asset should be equal to the sum of the liabilities and equity. Okay, equity or capital of Mr. John De La Cruz. Okay, so let's go on. Okay, so account. Let's find first what are the asset of the company. Accounts payable, that's not an asset. Okay, that's a liability. Accounts receivable. Okay, so that's an asset. So 210,000. So you can list it down in the asset. Cash. Of course, cash is also an asset. Okay. In fact, normally in the listing of the assets of the company, cash, because it's the most liquid, comes first. Okay. So you have cash of 146,000. Okay. So these are all expenses. Okay. There's another asset. Supplies of 9,000. So how much is the total asset? So you have three asset component. You have the cash of 146, and then you have the accounts receivable of 210,000, and then you have supplies of 9,000. So how much is our total assets?
It's around 365,000.
Okay. So okay, it's exactly okay. Exactly how much again? 365,000. You're correct. Very
Yes,
good, Miss Joy. Okay.
thank you.
So let's now check if the total of the liabilities and equity or the capital is also 365,000. So let's total again. Okay. So let's find the liability. Okay. Accounts payable, that's a liability, 25,000. Are there any more liabilities, Miss Joy, in this enumeration?
Supplies expense. No, supplies.
Oh, well, we said supplies is an asset, right?
Oh, yes, yes, it's an asset. So, one, two. None, I think, sir. Only the accounts payable.
That's right.
Five.
Okay, so you have only one component of liability, which is accounts payable, amounting to
25. Okay.
25,000. Okay, so that's the total liability. Now let's construct the equity of Mr. or the capital of Mr. John De La Cruz. Okay, let's see the information. It says here, at the beginning of the year, which is January 1, 2020, there was an initial capital of 180,000, right? Okay. Now, did you recall, Miss Joy, how much was the net income?
Um, it's around 200.
Okay, it's 200.
Yes.
Yes. Okay,
Yes.
$200,000. Okay.
Yes. Yes.
So 180,000. Okay. Of course, we said the owner gets the benefit of the profit, right? Okay, so he gets the entire profit. If it's a net loss, then the owner suffers the net loss. Okay, so in this case, it's a net profit, so it's a happy time for the owner of the company. So 180,000 plus the net income for 2020 of 200,000. However, there's a withdrawal, right? Uh, John De La Cruz withdrew 40,000. So that's a deduction. Okay? So you have a capital of 180 plus 200,000, the net income that we computed, minus 40,000. How much is that?
Let me compute, sir.
Sure. Take your time. So you have 180
Three,
plus the net income of 200.
and then
Then you have the withdrawal of $40,000.
340.
Yes, correct. 340,000. So we total the liabilities. No? So the
Yes.
liabilities is only one. We said that's 25,000.
Uh-huh.
So 25,000 plus 340,000, how much is that?
5 plus 340. It's 365.
Correct.
Okay.
Okay. Did you recall how much was the total asset?
Yes, it's 365,000.
Yes. Okay. So you now have completed the balance sheet. Again, to reiterate, we have a net income of 200,000, okay, which we derive from uh, deducting all the expenses from the miscellaneous or the fees earned of 875,000. And then we have a total asset comprised of your cash, 146, accounts receivable, 210,000, and then your supplies of 9,000. So that's a 365,000. And then you have the liabilities of 25,000 plus, okay? The
Oh,
beginning capital of 180,000 plus the 200,000 net income minus the 40,000. Then you have your total liabilities and stockholders De La Cruz capital of 340,000. Total of 365,000. So you now have completed the balance sheet. Okay? So we have prepared the income statement. We have prepared the balance sheet. The balance sheet. Okay? Okay. So analyze the financial statement in the financial statements that you have prepared. What can you say about the income statement and the balance sheet of the company? Again, just to summarize, the income statement shows the performance of the company. Since the company generated a profit, okay, we can generally say that there is a good performance. However, since we only know 1 year, we cannot say if there is a increase in the net income or a decrease in net income because there's no information that was provided. Let's say, for example, those information were provided, then you can make the comparison. So, for example, let's say in the previous years, the net income is $100,000. So if you compare it with $200,000, then you say it's good, right? Because there's an increase of 100% in the income or the net profit of the company. Let's say, for example, the net income last year, 2019, was 400,000. Okay? And it became 200,000. Are you happy if you are Mr. De La Cruz, Joy? From 400,000, your net income become 200,000. Are you happy for that, or you're not satisfied with that performance?
No, I'm not happy with my performance.
Okay. Because there's a decline, no? 50% decline in the performance. So the way really is to compare it with the previous years. Okay. Now
Mhm.
the balance sheet. Okay. The balance sheet generally shows you, okay, the assets, the liabilities, and the equity. So if we compare, the total asset is 365,000, okay, with only 25,000 liabilities. So okay, so let's see. Okay, we said we said in the previous discussion that the asset of the company is supplied by the creditors and the owners. So if only $25,000 out of $365,000 were provided by creditors, what percentage is that? Can you compute 25,000 over $365,000? Okay, how much percentage is that?
Let me see.
25,000 divided by 365,000. So this, you will see how much was provided by the creditors. What is the amount? Take your time.
I didn't catch the last part, sir. Did you say 25,000.
which is the accounts payable,
Uh-huh.
divided
And
by
then,
the
uh-huh.
total assets of 365,000.
It's showing here it's 0.068.
0.068.
Then the rest is 49. Oh, maybe I'm wrong.
So meaning it's just 6.85%, right?
Yes, round up. Yes, 6,845.
6.85%, right?
Yes.
Okay. So that's a small percentage compared to provided by the owners, right? So to compute for the owners, it's simply 340,000 over 365,000. So how many percent is that?
340. Only one? I'm sorry.
So 340,000 divided by 365,000.
It's one, sir. Only one.
Okay.
Point one.
Okay. So
That's
if
what.
you divide that, okay,
Uh-huh.
try to divide it again. Okay, that's about 93.15%. So 340,000 divided by 365,000. So 0.9315. So if you make that a percentage, 93.15%. So it shows that bulk of the assets are contributed by the owners. So if you are the owner and you contributed so much, you really believe in the business. That's the way to interpret it. Okay, because you really limit the liabilities. Okay, so you are the one who providing uh, primarily the assets of the company. Okay, so that's the way we analyze the financial statements. Now, the case, any questions with this, the preparation of the income statement and the balance sheet? This is pretty straightforward now. Okay, case number three is the preparation of the cash flow statement. Let me share screen again. Case number three. You can also find, if it's possible, Miss Joy, to find your uh, cash flow statement. Okay, so this is case study assessment number three. This is for week number 7. Okay, okay. So again, you have here Mr. John. Okay, who is a major stockholder of ABCD company. So he requested for the audited financial statement of the company. Last time, he looked into the income statement and the balance sheet, the one that we analyzed a while ago. This time, he looked closer into the cash flow statement of the company, and he found out that there are positive cash flow from operating, investing, and financing activity. So let's see if there are really positive cash flow. Okay, so you remember, just to review, okay, cash is the most important, okay, asset of the company, because cash is used, okay, by the company to pay for its operation, okay, to make investments, okay, investments in its uh, property, plant, and equipment, okay. Okay, so that's the focus. So you remember in the balance sheet, okay, the cash is a figure. But how did we get that figure? We get that from the statement of cash flow. Now, the statement of cash flow classifies the sources of the cash into the operating, meaning this cash comes from the operation of the company. When you say operation, you're referring to the current assets and current liabilities of the company. Current assets and current liability. Then you have your investing. Okay? So when you say investing, you invest. When you say invest, it's normally long term. Okay? That's why you are looking at the long term assets or the non current assets of the company. And when you say financing activities, okay, this represents your non-current liability and your uh, investments by the owner. Okay, so let me repeat that again. When you focus on operation, you're looking at current assets and current liability. When you look at investing, you look at the non-current assets of the company investing. Okay, so that's a long term. And when you say financing, you look at the non-current liabilities and the investment of the owners. Now, how do we prepare the cash flow statement? Okay, we get the cash flow statement, okay, from the comparative balance sheet. As the term say comparative, meaning 2 years. Okay, so here we're going to analyze each and every one. What happened to this uh, current assets and current liability? And of course, we will also be looking at the stockholders' equity. Okay, so here's what we're gonna do. Miss Joy, if it's possible to get a pen and paper because we will write down. Okay, we will write down uh, the components of the cash flow statement. So let me know if you are able to get a pen and paper. Okay.
I'm prepared, sir.
Okay. Thank you so much. Okay. Now, so we start from we said uh, using the net income of the company. Okay. So you remember net income is prepared using the accrual method. Okay, meaning you don't wait for cash to be collected. You don't wait for cash to be paid for expenses. As long as you render the service, deliver the goods, that's a revenue. As long as you got the benefit from the expenses, whether or not you paid it, that's already an expense from the company. But what we're going to do is to align the accrual and make it cash basis. Okay, so from accrual we change it to net to cash basis. Okay, so first we compute for the cash flow from operations. Okay, so we start from the net income figure. So please write net income, okay, of 98,500. Okay, so you have net income of 9. That's our starting point. Now let's look at the items in the operating expenses. So if there are items that are non-cash expense, okay, non-cash expense, we will add it back. Okay, we will add it back. Why? Because when you prepared using the accrual method, you deducted this, but there was no cash payment. Okay, there was no cash payment. So in order to offset that, we will add it back. Okay, so let's look at the operating expenses. Okay, depreciation expense. Okay, you remember depreciation expense. Okay, you bought, for example, a building or an equipment. You paid it now, but you will use it, for example, for a 10-year period. So what do? You spread out the benefit over 10 years. Okay, so we spread it out. Okay, so that's the depreciation expense. But when we spread it out, we don't pay for the depreciation expense because we have paid it on day one. Okay, that's the difference. There's no cash involved. There's no cash that comes out from the company. So we will add it back. So can you please put in your next line? Okay, you have your add, okay, non-cash expenses. Okay, so first is the depreciation expense, 23,500. Okay, now what is patent amortization? You remember, for depreciation, that is tangible, something that you can see, something that you can hold. But in for patent amortization, these are your intangible asset. But you have benefit arising from that asset. So you also spread it out over a period of time. So this is also a non-cash expense. So what do? You add it back. Okay? So you add it back. So you have Again, just to reiterate, just to enumerate again, okay? You start from the net income of 98,500, then depreciation expense of 23,500, then patent amortization of 70,000. So that's an addition, okay? So that's an addition. Other operating expenses, okay, uh, these are actual expenses, and we actually pay this, okay? So these are your salaries, your utilities. So we will not touch this one, okay? Now, let's go on. Gain on sale of investment. So now, gain on sale of investment is an actual uh, uh, gain, okay, or revenue of the company. Okay, but when we say gain on sale of investment, these are not the main sources of uh, income of the company. These are auxiliary transactions, okay? Auxiliary sources, additional sources of income for the company. Okay, so that's 11,000. Now, what we're gonna do, because this is not operating, okay? This is not part of your operations, but it was added in the net income. Okay, let's look at the investment. Okay, let's look at first the investment. Let's see the investment. Okay, so you have there an investment account. Okay, here. Okay, from 75,000, sorry, 35, so 84,700 less 35,700, meaning it went down to 35,700. Why did it went down? There was a sale. Okay, can you deduct how much was that? 84,700 minus 35,700. 84,700 minus 35,700. How much is the answer?
It's 49,000.
Okay, 49,000. Okay, 49,000. So that's the book value or the cost, right? Now, if the cost is 49 and you have a gain of 11, how much did you actually sold the investment? You have to add the gain, right? Okay. So 49,000, which was the book value of the investment, plus, okay, 11,000. Okay. So how much is that? Is that 60,000? Right?
Yes,
49,000,
yes, sir.
yes. Okay. So what is that? Okay, that is uh, uh, proceeds, okay, from the sale of investment. Okay, so let's go back. So what do we do with this? Okay, because this is not operating, we will, and this is added. Okay, there, there's an addition. So in the meantime, we will deduct this. Okay, because we will show the entire proceeds in the investing activities. Okay, so from your amortization, you write, Miss Joy, less gain on sale of investment. So how much is that? 11,000. Okay, 11,000. Okay, can you now total the depreciation? Okay, which is a plus. Patent amortization, 7,000, which is a plus. And then minus 11,000 gain on sale of investment. How much is the total? 23,500 plus 7,000 minus 11,000.
It's 19,500, sir.
Yes. Okay. 19,500. So you total that and then you align that with 98,500. Okay. Now let's make the changes. Let's analyze the changes in current uh, assets and current liability. Okay. As a general rule, you can write this down. Okay. When there is an increase in current assets, okay, that is deducted. Okay, that is deducted. If there are decrease in current assets, that is added. So what's the relationship? It's inverse, right? Okay. So when there's an increase in current assets, you deduct. If there is decrease in current assets, you add. Okay. So let's analyze that. Okay. Now let's look at invent accounts receivable. Okay. From 102,300, it became 95,300. So there was a reduction, right?
Yes.
Okay. How much was the reduction?
Let's check, sir. 102. Sir, I can't see the whole
Oh,
number.
there.
Uh, I think can you scroll down the
Here.
yes.
102,300
Oh, okay. Wait,
minus 95,300. So how much is that?
it's 7,000, sir.
7,000. Okay? So 7,000. So that's a reduction in accounts receivable. So if it's a reduction, we add it, right? Okay,
Yes.
so can you please write it at the another section, no? Okay.
Mm-hmm.
De- decrease in so decrease in accounts receivable 7,000. Okay, decrease in accounts receivable 7,000. Okay. Now let's look at inventories. What happened to inventories? From 157,900, you have now 165,200. So there's actually what? An increase, right?
Yes.
Okay. Now, what does that mean? That means there was more cash that was used, right? More cash that was used by the company. So it's a use of cash, okay? Because they have bought more inventories. In the case of receivable, what happened? There was an inflow of cash because they have collected from 102,300, it's now down to 95,300. So there's an actual inflow. That's why you added it back. So you see the no, the rationale, the behind why are we adding, okay, the reduction in current assets. Okay. So for current liability, for the inventories, there's actually how much was the reduction? You just subtract. Sorry, how much is the increase? Rather, how much was the increase? 157,900. It's now 165,200. How much is that? Are you still there, Miss Joy? Hello?
Hello, sir. Hello.
Yes.
Sorry.
Okay.
It's
Sorry.
7,600, if I'm not mistaken.
Okay. So 157,900
Mhm.
minus 165,200. That's how much? 7,000?
600, sir.
Is that 1,000? 157. Can you do the math again?
I'm sorry.
157.9
Point nine.
minus 165.2. That's 7,300, right?
Oh, 7,300, sir.
Okay, so that's a reduction. Okay, that's a minus, no? So what you can do is, okay, accounts receivable, we said, okay, 7,000 plus. Okay, decrease in increase in inventory, you put a minus sign, so you will it's a negative. Okay, it's a
Okay.
negative. Okay, now let's look at prepaid expenses. Prepaid expenses actually increase, right? So there was
Mhm.
a use of prepaid, there was a use of cash. How much is this? Okay, 5,860 minus 6,240, that's
It's 380, sir.
380. Okay, so 380, again, this is a use of cash, right? Okay,
Okay.
so it's a what? Reduction. So you put a minus again. Huh? Minus again. Okay. Now, prepaid expenses. Okay. So the next is, well, these are the long-term already, non-current assets. No? So we stop the analysis here. Okay. So we go to the accounts payable. Okay. So we said in accounts payable, when there is a increase in accounts payable, it's actually an addition. Okay. An addition to the cash flow. Okay. Okay. Why? Because instead of paying it, you are delaying the payment. So you're conserving the cash. Okay. So that's why it's an increase. So what happens if there's a decrease in current liability? Decrease, meaning you've paid, right? You've paid. So you use cash. So what happens? Oh, that's a reduction. So there's a direct relationship. If you recall, I said in current assets, what happens? It's an inverse relationship, right? If there's an increase in current assets, you deduct. If there's a decrease in current asset, you add. But for current liability, if there's an increase, you add. If there's a decrease, you deduct. Okay, so let's take a look at that. Accounts payable, what happened? From 46,700, it went down, okay, to 43,500. So how much is the difference? 46,700 minus 73,500,
It's 200, sir.
200. Okay, can you please reject? Okay,
Um, for
46,700 minus 73,500. Okay, that's an actual reduction of how much?
46, 700 minus 43. Oh, 3,200, sir.
Yes, 3,200. Again, it's a negative, right? So you will deduct it later. Okay.
Okay.
Okay. So let's look at accrued expenses. Okay. Accrued expenses actually increased, right? From 12,500, it's now 14,000. So how much is the increase? That's how much is that? 1,500.
1,500.
We said
Yeah.
if there's
Mhm.
a decrease in current liability, you add. Okay, so that's an addition. You don't put a negative sign. Okay? Okay. Now, income taxes payable. Okay, what happened to income taxes payable? It increase or decrease?
It
Here,
decreased. It
it
decreased.
decreased, right? Okay, by how much?
It decreased to 1,300.
Okay, can you calculate that again?
Or
Income taxes payable. Okay. That's actually 84,
it's
8,400
8,
minus 79,
500, sir.
500. Okay.
Yes.
So, again, there's a what? Decrease, right?
Yes.
Okay, so there's a decrease. So that's a negative again. Okay. Now, we're ready to total. Okay, so can you total all of the plus? Okay, all of the plus are your accounts receivable of 7,000, decrease in accounts receivable. Okay, plus your accrued expenses, increase of 1,500. Okay, and then, so that's how much is the total of that? 8,500, right? Okay. And then you total all the minus. Okay. Increase in inventories of 7,300. You also have the prepaid expenses of 380 plus. And then decrease in accounts payable of 3,200. Again, you add that. And then income taxes payable of 500. How much is the total negative or the decrease? So 7,300 plus 380 plus 3,200 plus 500. How much is that?
Yes. 380 plus
3,200 plus 500.
3,000. I'm sorry, sir. I got lost.
Okay, no problem.
773
Plus
plus
380
380. Yes. And where
plus
is
3,200 plus 500. How much is that?
500? 11,380.
Correct. Okay. So you combine that with the initial 8.5, okay? So you have a negative of how much?
It's 8.5. It's rounded to negative, sir. 2,880.
2,880. Okay, so that's 8.5 minus 11,380. Yes, that's 2,880, right? Okay, so you're now ready to compute for the cash flow from operation. So we said net income, okay, net income of 98,500, okay, plus the sum of the depreciation, amortization, and then less gain on equipment of gain on sale of investment of 19,500 minus 2,880. So how much is your cash flow from operation? 98,500 plus 19,500 minus 2,880. How much is that? 985 plus
Uh, 98,500, sir.
98,500 plus 19,500
19,500.
minus 2,880.
3,500 plus 19,500.
How much is your cash flow from operations?
118. 985 plus 19,500 is
Yes.
118.
Yes.
And then subtract the 2,880.
880. Yes. So how much is that?
It's 115,120.
Correct. Okay, so that's your cash flow from operation. Actually, that's the hardest part, but we've done that already. Okay, so you remember that cash flow from operation 115,120. Now let's see the cash flow from investing. Okay, so we said cash flow from investing. We look at the non-current assets. We've analyzed this already, right? Investment. Okay, so we said we sold 49,000, the difference, right? 84,700 minus 35,700, that's 49,000. That's the book value. But we have a gain, okay? We have a gain of 11,000. So the total proceeds, so you put there, sales proceeds from investment is actually 60,000. So how do you come up with 60,000? That's 49,000 plus 11,000. Okay, so that's your sale of investment. Okay, now let's look at the additional information. Oh, there was a land costing for 15,000 was sold for 15,000. Let's check. The land was 90,000 before, right? In 2020, it went down to here 75,000. So that's 15,000. So again, so we're ready. So you put there again under cash flow from investing activities. Okay, sale of land 15,000. Okay, sale of land 15,000. Okay, okay. Next, look at building. Okay, building. What happened to building here? From 260,000, it went up to 375,000. How much is that, Miss Joy?
Yes, sir. 75. There's a I'm sorry, sir. It increased, right?
Yes.
Um,
It increased by how much?
it increased to 115.
Correct. That's exactly the information here. Okay, a building costing 115,000 was constructed. So your third item under investing activity is the uh, payment for construction of building. Okay, you label it payment for construction of building. 115,000. Okay. Okay, so that's the last item under investing. So we total that. Sale of investment, 60,000. Sale of land, 15,000. And then minus the cost of the building that we constructed, 115,000. So how much was the cash from investing activities? 60,000, the sale of investment, plus the sale of land for 15,000, information letter A, and then information letter C, less, okay, the cost of the building, 115,000. How much was that? Are you still there, Miss Joy?
Hello, sir.
Yeah.
I'm
How
sorry.
much is the total investing? Cash from investing. So you have sale of investment, 60,000, sale of land, 15,000, and then you have your cost of building construction, 115,000. So how much is total? It's a negative of
Uh, 15, and then the
plus
60.
60 minus 115.
Okay. Minus 115.
So that's a negative
Uh, 40,
40,000.
40. Yes, sir.
Yes, correct.
Oh, I
Okay.
see. Yeah.
So we now have two sources, right? Okay, cash flow from operation, 115,120, plus the cash flow from investing of negative 40,000. So we're now down to the third one, okay, the cash flow from financing. Okay, so when we say financing, it's the liabilities, non-current liabilities, okay, and the issuances of equity. Okay, so let's take a look. Okay, now look at notes payable, right? Notes payable. From zero, it went up to 40,000. So there was an issuance of notes payable. So when you issue notes, you receive cash, right? So that's an addition. So under cash flow from financing activity, you label it proceeds of mortgage notes payable, 40,000. That's an addition. Okay, that's an addition. Okay. Now, are there any changes in the equity? Okay, bonds payable, there was a change. Common stock, there's also a change. But let's look at the additional information. 2,500 shares of common stock were issued at 40, okay, in exchange for the bonds payable. So there was no cash involved. So if there's no cash involved, it will not affect our cash flow statement. But this will be included in the notes to the financial statement. So this simply tells us this information will not affect the statement of cash flows. Why? Because there is no cash received by the company. Okay. Now, cash dividends declared is the last item. 74,640. But take note, this was not the amount that was paid. Okay. So how much was actually paid? Okay, let's look. Okay. So let's look at dividends payable. No? Okay, so dividends payable from 10,000, it went up to 14,000. Meaning 4,000 was not paid, right? Okay. So from this amount, 74,670, we deduct the 4,000 that was not paid. How much was that? That's 70,000, right?
Yes, sir.
70,670. So we total that. Okay, so proceeds of notes payable plus of 40,000 minus the paid dividends of 70,670. How much is the total? Negative how much?
70,000 I'm sorry, sir. 70,000 less 670.
less 40,000. So that's a negative how much? 30,670, right?
Yes,
Okay.
30,670.
So you put that negative, meaning cash went out. Okay. That's why there's a use of cash. Okay. So let's now total the cash flow for the year. Okay. So you have cash flow from operations of 115,120 positive, right? Okay. Less, okay, the cash flow from investing activities of 40,000 negative. So that's a less. And then less cash flow from financing activities, 30,670. How much is the total cash generated for the year? So you have 115,120 minus 40,000 minus 30,670. How much is the total? That is the cash generated for the year, right? Okay. You should get a total of how much?
That's 115, sir.
115, 120 minus 40,000 minus 30,670. How much is that? That's your cash generated for the year.
115, 20 minus 30. And the last.
You should be getting a number of 44,450. Did you get that?
Yes, sir.
Okay.
44,450.
Okay. So that's the cash generated for the year. But you have a beginning balance of cash, right? Can you add this 95,900? You should be getting 140,350. Can you do that?
95,300, sir.
Here, 95,900. The
Oh,
beginning
900.
cash balance. Yeah. Plus the one that you computed, the cash that was generated for the year, 44,450. How much is the total?
140.150.
140
Point.
here,
Yes, sir.
140,350. Okay? So
Oh,
you've explained already, na?
okay.
Diba? 44,450 plus 95,900. That's a total of 140,350. So you've prepared already. Now, what can we say? Na? So we've explained how did we come up with 140,350. Don't worry, I will attach as a reference na, the solution, the written solution. But I wanted you to have a feel of how to compute it. Did you enjoy the computation, Miss Joy?
Yes, sir. It's quite challenging.
It's quite challenging. That's precisely. In fact, for actual accountants, for real accountants, this is one of the hardest thing to prepare, the cash flow statement. But you've done that already. Okay? Now let's just analyze the cash flow statement. Okay, we said that there was a cash flow from operation of 115,000. That's good. What does that mean? It means that the company can pay its current liabilities and generate a positive cash of 115,140. Now, what happens to investing? Okay, normally an investing, when you invest, it's money out, right? Okay, so it's normal that it's negative because when you invest, you buy equipment, you buy land, you sell investment. Okay, that's normally a negative. So it's only okay. It's okay to have a negative cash flow from investing. Now, for financing, it may depend whether it's good or not good. Okay. So Just remember, okay, there is a cost in issuing liabilities. There is a cost issuing common shares or the ownership, the common stock. So you have to compare the cost. Okay. Okay. So, but in our case, we generally say that that's a negative also. Okay. Because the company issued liabilities. Okay. Okay. So that's how you interpret the cash flow statement. So let me stop share already. Okay. So that's the essence of our subject now. So for those students that have not yet completed the exams, submitted the open class questionnaires, submissions, okay, or even your cash, so your activities, be that the um, extra credit or this case study, you can submit it. I'm allowing you to submit it so that you can catch up with your grade. Okay, so do you have any question before we end today's meeting, Miss Joy?
Uh, yes, sir.
Yes, go ahead.
I have to do the this case study 3 and then submit it to which part? I was trying
The
to,
final projects.
yes,
There's a
on
final
the,
project links, right? Okay, just follow the instruction so that I can receive it properly. Okay, because
okay.
if you just submit it in the extra credit, the grading is different. Okay, so in the extra credit, every time you submit, the maximum is 2 points already. 2 points only. Okay.
Yes.
Whereas
Also,
case study, it has a different set. It's a set of 10. Okay. So it's higher. Okay.
yeah, I also
So
can
yeah.
only download 3 files and then I have to delete the others
Yes.
and then I
And
have
then
to
submit it.
upload another. Yes.
Yes. Submit it
Oh,
correspondingly to the right submission so that I can grade it appropriately. Okay. So that's it. So if you have any question, just send me a chat, okay, and I will try to respond immediately as soon as possible. Or you can send an email, okay, if there's a longer question.
okay.
Okay.
So, mhm.
Thank you so much, Miss Joy.
Yes, sir. Thank you. Have a
Okay,
good
bye.
day. I
You
mean, have a
too.
good night.
Okay. Bye
Bye
bye.
bye.